Let's get across the market open now. Peter Maguire joining us from trading.com. Pete, welcome to Tuesday. Great to catch up with you again. Let's take a look at what we're seeing in markets at the moment. What's standing out for you?
Well, good morning, Andrew. I think it was a good night overall in the sense of US equities that had a nice run up. Nasdaq up nearly 0.5%. And you can't take your focus off certainly precious metals. Silver breaking that $47 range, and it's just extraordinary. And you've got gold there sitting at 38.60 on the futures. So, yeah, big night as far as precious metals. Keep an eye also on platinum. So they're the key markets that I think everyone's gravitating towards.
Let's take a little bit of a closer look at gold and those other precious metals. But gold also getting a boost with the prospect perhaps of a US government shutdown.
Yes, exactly. Wednesday is the big day, and we've certainly got our eyes focused on that. So let's see how it plays out. I mean, the market is very much concerned with, are we going to see a shutdown? And it's just a wait and see if it does materialise. I mean, I don't want to speculate on it, but we've just seen extraordinary growth over the last, 4 to 6 months. And nothing surprises us as far as the administration or what everyone's got a point of view on.
Can you see gold continue to run from here? I mean, as it approaches 4,000 US dollars.
Yeah, I think so, Andrew. I feel as though that momentum in the fourth quarter will probably, if anything, accelerate. So, yeah, I think everyone's focused on 42.50. I think it'll take 4,000 out fairly quickly. Just the velocity of it is just extraordinary. And everyone's realising it's a raging bull market. So I think it's got further potential, certainly. I think 26 is going to be a showtime year for it, and keep an eye very much on silver. It's up 60% or 62% since the April lows.
Now, we're talking about this US government shutdown there. What else are we looking at just as far as the Fed is concerned with the prospect of further interest rates to come? We're getting a lot more Fed commentary coming to us as well. How's this playing out in the bond market at the moment, Pete?
You're at 4.14 for the US 10-year, Andrew. It's given up a bit of that steam overnight. The 2-year I'm keeping a close eye on as well. But the 10-year it's choppy. It was under 4% going back about a week and a half or so ago, and it's bounced since then, as we're very much aware of. US dollar index running at 97, high 97s, just under 98. And one can't take your eye off, the overall theme as far as what's going on with US. We're keeping an eye naturally on ISM PMIs, which are out tomorrow and Friday, and then of course US non-farm payrolls on Friday as well.
Which brings us to our own central bank, Pete. Of course, the RBA meeting today, or at least revealing its policy decision, expectations of no rate cuts. How are you seeing this?
I think that's exactly right, Andrew. We've seen 3 cuts so far this year. As far as our RBA is concerned, you've got core inflation accelerated to 3.4% from 3.2%. The CPI rose to 3.3% year on year in August from 2.8% in July, and up above expectation. So that touches the RBA's upper boundary of 2 to 3% inflation target, and it's the highest since July of 2024. So I feel as though the way the market's sitting, you've got a probability of about a 75% chance of a 25 basis point cut by Christmas, Andrew.
How is this playing out in currencies, particularly with the performance of the Aussie dollar at the moment, Pete?
65.76. US dollars come under pressure to the downside. It continues to be very choppy, but the Aussie, it's shown some pretty good breakouts in the last couple of weeks as far as opportunity. And I don't think that that's going to, settle anytime soon, because the currency markets have been relatively volatile. So let's see how it rolls up to Christmas. We understand from a rate policy perspective happening here and, of course, in the US. So if any further surprises happen or geopolitical concerns, that could throw a spanner in the works and create more opportunity.
Let's just return to commodities, in particular oil. Now, it has come under pressure, particularly with the prospect of an increase in supply.
Absolutely. OPEC Plus meeting on the 5th of October, that is, Andrew. It's had a bit of a pullback. It's been a nice market for short in the last 24 hours. And that's leading up to about 137,000 extra barrels hitting the target, hitting the market come October. So they're bringing that forward, I understand, from November. So that's going to be, again, that glut that we've spoken about together for the last 6 months. It's now materialising as we roll into Q4, the start of it tomorrow. And that's, I think, going to be a key framework as far as cheaper energy prices over Q4 and Q1 in 26, which is going to be beneficial to inflation and certainly to the consumers globally.
And Pete, checking in on cryptocurrencies. Bitcoin has been trading in a range. What are you looking at here?
Well, you know, it's running at 114, Andrew. It's been, again, choppy, back off those, you know, highs of 125. But it's certainly offering, if you want to be a short-term trader, plenty of movement, because you see over a window of a day or two, you know, a $2,000 or $3,000 move is not unusual. So there's plenty of opportunities there, and that's all comes down to risk tolerance. But it's not for the faint-hearted, but it offers, you know, if you set your technicals in the right way and you're not greedy, it can be quite an interesting market to trade. I feel as though it's got more potential coming into the end of Q4 and rolling into 26, with the Trump administration certainly very focused on cryptos and you know, non-centralized digital currencies.
So, I mean, if you're in crypto, where do you want to be right now? Have you got to focus on Ethereum?
Yeah, Ethereum, and also XRP running a 289 from its the way it's structured. And, you know, the Ethereum certainly has had a nice, you know, uplift that in the last few months, and it seems to be a little bit range bound at the moment. But I think you're probably, its best days are ahead of it leading into 26. So yeah, it's a market that offers, again, plenty of opportunity. And you just trade your technicals, as it says there on the chart, you know, up above the 200, the 50 and the 20-day moving averages. So, yeah, just see what opportunities present.
Pete, let's sum it up with finishing on equities where we're at the moment. Can you see any downside at the moment?
Oh, it's very toppy. It's frothy. I mean, you know, the market's had a huge run up, Andrew, as we know. It's again a raging bull market, and it's just not the US. I mean, you know, you look at some of those other markets. Japan's on fire, absolutely strong, and a lot of the emerging markets are as well. You know, you think good moves. Just to put my mind out there, you know, Pakistan's up nearly 100% for the year, and Sri Lanka's up the best over 80%. So they're very, very strong. So it's taken. You know, the rising tide lifted all boats, and I think that the way the US equities are, it could be a nice place to be and continue to be rolling into Q4.